Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, February 20th, 2008. Well, we are seeing some massive selling on Wall Street again, folks, and there is just not any sign that this is letting up. It's all about the banks, financials, the banks, you name it, insurers like MetLife, Prudential, HIG, Hartford, you name it, they're just getting crushed. And we're going to talk about the charts today, but it's going to be an interesting chart. Right now I'm showing you the 420, but I actually want to flip over to the 10-minute to start, and we can talk about some levels. Now, as we get lower and lower towards November lows, and by the way, the Dow made a new 11-year low at this point. That is an 11-year low. Absolutely unbelievable selling in the Dow. The rest of the market, the Nasdaq, the S&P, still off their November lows, so we have to realize that. Remember, the Dow is made up of 25 stocks, so it's a very skewed index. Even though the media hypes on it a lot, you really want to follow the Nasdaq and S&P. Now, the trend lines here are as follows. These are all your key trend lines. Look at the gap down today. Now this line, and I can go back and show you guys how far these go back. They're great trend lines, no doubt about it. You can see this lines down here, each one matching up to either a top or a bottom of a key push in the markets, going back quite a long ways here, guys. And when it's come and goes, you can see even one going back to the 11th of February here coming into play from that low on the 11th of February. Now, as we go into today's market, guys, and volume kickstarting here, and you're starting to get a little bit of a push on this market, we'll start to watch it here, but it's wacky day today, and again, it's a little bit of a crazy time to be doing a video as we are sinking. And just to reiterate, guys, the Dow down about 180 points or so, the Nasdaq trading down 22, and the S&P down about 20.5. Really, the Dow and the S&P down about 2.5%, while the Nasdaq trades down about 1.5. So the Nasdaq a little stronger. Now, the Nasdaq was weaker yesterday, basically on HPQ. Hewlett-Packard earnings were pretty ugly, causing the stock to sell off. And Apple yesterday, which there were some sales numbers that showed that PC sales dropped 6% in January, and that affected Apple quite a bit. But what you are seeing here, guys, is the key levels. Now, the key ones to watch are this. Notice the gap down today. We gapped right down to this lower trend line support. As soon as you get a low point on that chart and a bounce off of it, make sure you always draw that sideways line, because that'll be support later on. Now, you got a rally, a beautiful push up in this market. I mean, it was fantastic. In fact, oil actually went from a pullback today to basically a flat line on the chart. I'll show you the oil chart quickly before we go today. But you saw this nice push up all the way to these points. Now, one thing you have to remember is when you see this many trend lines all dissecting in an area like this or over here, this is telling you there's going to be way too much resistance to really clear that line, unless it's a major short squeeze, especially on the first hit here. Now, notice how the rally takes us right into 10 o'clock. Here's your 10 o'clock high. At that point, that's the high of the day as of now. So, again, a rally up into 10 o'clock. You right into this triple level of resistance points, and then you start to sell off. Where do you come down to? Double bottom support. Here's the low. Remember, I said draw that line straight across because it'll play in again during the day. Here it comes into play again on the low pullback level. The market tries to get a bounce, gets a little more of a bounce, and in this candle, you actually move up, hit the 20 moving average, which is this yellow line sloping down, okay? And you also hit this upper trend line, two levels of the trend line. That's a triple necktie, if you will, of two trend lines and the 20 moving average. A lot of resistance again, guys. Just too much for this market to handle. The whole time this is going on, the financials are getting roasted. You have Bank of America getting crushed. You have Citigroup getting crushed. Wells Fargo crushed. Goldman crushed. You name it, it's getting crushed today in the financial sector. HIG, Hartford, Prudential. I mean, it is a bloodbath today, guys. There's no doubt about it. What's going on today, many of you might want to know. Essentially, what's going on is there's a lot of rumors about nationalization going on. A lot of rumors about, these banks not having enough capital, and that the nationalization will come in. Essentially, nationalization would wipe out equity value of the stocks. I mean, you basically maybe, I don't know how they'd handle the bond and the preferred shares of these stocks, but for the most part, any average shareholder, any normal shares of the company would probably be worthless on a nationalization. Now, that's a rumor. A lot of rumor mongering going around. That's really, in my book, it's kind of getting overdone to the downside. But at this point, what can you do? You have to sit back and say, the market's going to do what it is, and I'll just sit out until we get a better situation. That's the best you can do. Now, the scary thing about this is you sold off at this point, and you broke the double bottom. Notice how the first time you bounce, second time's no guarantee of a bounce. Even the first time's not a guarantee, but it's a high probability you will bounce. So you bounce up here, hit the 20, hit the multiple moving average lines, the green lines I have drawn in, sell off, break down. Your next support line is this one. This is the same line that we hit right here. There's a multiple hit all the way up. It's trending all the way back, multiple days. And you hit this, you bounce up, you try to hold it, and then the market just gets hit again. And at this point, you close below. You actually move below. But the beauty about this now is you're beginning to rally, and you've recaptured this trend line. So all of a sudden, this is a recapture of a support line, and the market's starting to look a little better. Just a little better here, not a lot. You still have the market down substantially, but at this point, you're now looking at this point where if you move up a little more, you're going to come into the 20 moving average and this line. Now remember, this breakdown line that was broken, this one straight across from the double bottom, I was calling it all day in the chat room double bottom support, as it was right here. Once it broke, obviously it doesn't. And remember, support line broken is resistance to the upside. So the 20 moving average and the trend line here will be resistance. And at this point, you're still not sold. We're still intra-candle here trading above this. So you could easily pull back in this candle and close back below or on that line, which in my book would mean you have a possibility of breaking to the lows. Support on this intraday chart now, draw on your new support line. The low after a bounce will be support again. That'll be new double bottom support in this market after a rally. So you want to have that line drawn in. But as of now, this line is support as long as we trade above it. This will be resistance right here, and this will be support 2. That's your intraday analysis, folks. Going to the 60-minute, this was a big trend line. This was that same trend line that I drew in here. Now, you're below it. The question is, by the close, can we close back above it? That's going to be the big thing on my book. A very interesting chart because it doesn't happen a lot, folks, where you trade like this and then you break down. This is a very unusual situation, very options X-ish, if I will. Today, options expiration, and the trading this week has been out of this world. It's been a very weird trading environment. We really gapped down on Tuesday, traded sideways to slightly lower for 3 days, and then today gapped down again and are now trading lower. Now, again, the question in my book will be, can we recapture a couple of these key levels? Ultimately, you could. I mean, you're dealing with the November lows on the Dow. The S&P, SPY lows, and the S&P lows are not that far away at this point. NASDAQ still has a ways to go. NASDAQ's been the strong index out there, still over 100 points away from its November lows. Now, the closing low is the next situation that we'll discuss. Obviously, we're going to go into all this kind of closing low levels on the daily chart on the videos in the Research Center. The premium subscribers get access to all that kind of stuff. The Pro Trader watch list, hidden gems, you name it. We'll go over all this. But needless to say, as long as, and this is what I'd mentioned, and I can mention it because it's past now, but the last couple days we had said, as long as you stay below 80 on this S&P, you have to figure the November lows will be tested, and it looks like that's what's happening. So that 80 level was a very key level, guys. You can see how long we stayed on that 80 level right here. You tested it for 3 straight days, right here, on the first day on the gap down, second day right here, third day right here. And as long as you could not break above that, that told you that you were going to go down in this market, and you had to assume that you could test those November lows because of it. So here we are, folks, and we'll have to keep a close eye on this candle, whether or not we recapture this line. Going quickly to the 420-minute, you can see these lines here are quite a wacky chart. I mean, this has been a wild trading market. Ever since really the market, bottom in November, you had that nice upswing. Now a retest on the downside, and we'll have to see where this goes. All right, guys? So something very peculiar to watch. I said I would touch on oil quickly on the intraday. We'll just touch on oil very, very quickly here on the intraday chart. You can see oil had a big, big move yesterday. This was a wacky chart. We gapped up on oil yesterday, pulled back to the gap fill. Remember, gap fill is always good support. And from there, you rallied up huge all day long, closing a little off the highs after you tagged this 200 moving average. Now, what happens today? You gap down, which is, in all fairness, you were up $4.50 on oil yesterday. You know you're going to pull back. All right, so that's the pullback. You got a big pullback at the open, but the oil stock, or the oil play, the USO here, rallied to gap fill. There's gap fill. Then kind of pulled back and actually got hit here on the market, bouncing a little bit. So the question is on this chart is, where are we setting up for? And again, we'll cover that in the Research Center. Does this mean that we're actually going to come down and retest these lows, or does this mean we're going to go up? Did we confirm an uptrend, a downtrend? What's going on here? We'll cover that in the Research Center as well at inthemoneystocks.com. Alrighty, guys, unbelievable market. This market is just getting hammered here. One last mention on the market right now. Dow down 169 points, NASDAQ down 21, and the S&P 500 down 19.5. Really an amazing day on the sell side, guys, continuing as Bank of America just getting slaughtered. And I'll just mention Bank of America down again. Citigroup getting slaughtered, down again. Look at these charts. Wells Fargo down again, and down $3 on Wells Fargo. Looks like Wells Fargo is the next one to go to $5 the way it seems. Alrighty, guys, take care. We'll talk to you tomorrow in the intraday video, or actually the weekend video. Take care.